Hi there, Larry Luna here with Team Luna Homes, powered by Cross Country Mortgage and brokered by eXp Realty. Buying a home is exciting, but it also comes with a lot of moving parts. Between inspections, appraisals, and closing documents, two terms you'll hear often are escrow and title insurance. Both are essential to protecting your money and your ownership rights in the home buying process. Now, what is escrow? Escrow is a neutral third-party service that manages funds and documents during a real estate transaction. Think of escrow as the middle ground between the buyer and the seller, making sure both sides meet their obligations before money and property officially changes hands. Escrow handles holding the buyer's earnest money deposit securely, collecting and organizing all the necessary closing documents, ensuring conditions of the sale, repairs, inspections, loan funding, etc. are met, dispersing funds to the correct parties once the deal is finalized. In short, escrow protects both the buyer and seller by making sure everything is handled fairly and securely. Now, what is title insurance? While escrow protects the process, title insurance protects the ownership of the property. Title insurance covers you against issues from the property's past that could affect your legal ownership. So here are some examples of title issues. Old liens from unpaid debts, errors or omissions in past deeds or records, unknown heirs with a claim to the property, fraud or forgery in a previous transfer. If one of these problems arises after you close, title insurance helps cover legal fees and protects your ownership rights. Now, why do you need title insurance? Well, your home is likely your largest financial investment. The insurance safeguards that investment by protecting your ownership rights against claims or disputes, covering legal defense costs if someone challenges your title, providing peace of mind knowing your home is legally yours, free of hidden issues. Buyer versus seller title policies. What's the difference? Well, there are typically two types of title insurance policies in a real estate transaction. The owner's policy or the buyer's policy. That protects the buyer's ownership interest in the property. Covers risks like liens, errors in paperwork, or ownership disputes. Remains in effect for as long as the buyer owns the home. Lender's policy, often paid in connection with the seller's transaction. Protects the lender's interest in the property until the mortgage is paid off. Ensures the lender has a valid lien or collateral against the property, usually required whenever a loan is involved. Simply put, the owner's policy protects the buyer while the lender's policy protects the bank. Who pays for which policy can vary by state or even by local customs. Sometimes sellers pay for buyer's owner's policy, and sometimes the buyer covers it themselves. The bottom line, escrow ensures the transaction is fair and complete, while title insurance guarantees your ownership is protected. Together, they both give buyers and lenders peace of mind that the deal is secure from start to finish. I hope this information was helpful for you. Thanks for watching, and we'll see you next time. Bye-bye.